Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, May 19th at about 11:30 a.m. Eastern. Well, global shares hit a one-month high today as markets reflected increased hopes of a U.S. debt ceiling deal that could avoid a potentially calamitous default. The moves came after Democratic negotiators told President Joe Biden they were making steady progress on a deal to lift the U.S. debt ceiling and avoid a default. The U.S. currency and treasury debt markets underpin global trade and investment, so this is a very important deal. But it's not a done deal yet, though, and the U.S. government may default on some debt as early as June 1st, unless Congress votes to lift the debt ceiling. And on that certainly not cheerful but interesting note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, the SPY is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, today, when I captured this chart, the SPY, you can see up here on the hard right edge of the chart, was trading at $419.28. It actually gapped open to $420.17, then rose to a quick high of $420.72. So that was great. However, since then, it's been coming in a little bit. In fact, most of the indexes have softened up a bit here as the day wears on. But at least we have now risen above that 420 zone that was so important. Actually, it's right up here. It's risen above that 420 zone, broken out of it. Now the question is, can it stay above it, or can it at least stay above this $415 zone or 4150 on the S&P 500? That's what we need to continue this bull market. Now, we do know that the SPY is still trading 17% above the October lows, last October lows. That was 348. So we're getting a little better here, again, at 17% above that. Not quite a bull market, but getting closer. Now, what happens when if the SPY dips here? We do have support down here at 410. You see the 20-day moving average coming into this sideways consolidation. Actually, we've been consolidating here more or less since March, and breaking out of this zone is great. We do have support here down at 410 at the bottom of this consolidation. We've got the 20-day moving average coming here at 412. So this level is pretty good with support here. A little lower, we have the 50-day moving average at $406.30 today. And then we have it down just a bit lower. These lows down here about 405 or so, just below the 50-day moving average. Obviously, the bulls in the world do not want the SPY to dip below this 50-day moving average. So in the coming week, we will see if today's breakout can show strength or not. Personally, I prefer to wait until the debt ceiling debate is concluded and agreed upon before I jump into the market in a big way. It's going to get hectic one way or the other. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, excuse me, the Qs represents the top non-financial 100 companies by market capitalization in the NASDAQ stock market, like Apple, Amazon, Microsoft, Alphabet, excuse me, Meta, and so forth. Now, when I captured this chart today, the QQQ was trading at $337.18. This is about 24% above its October lows at $254.26. This point, now right here, I like to look at long-term charts, and this point right here at 337 also has resistance from back in May of 2021. Kind of interesting. So if you look back, there is resistance there. Also, what I'm also looking at, because this is quite a jump here, what I'm also looking at is the 14-day RSI that we see down here on this scale on the screen. When the RSI moves above the 72 line, the 14-day RSI moves above the 70 line, which is the line where it is right now. Actually, today it's at 72, almost at 73. When the RSI gets overbought, as we call it, then many times that will signal, and a lot of traders who know how to read it, it will signal them to take profits. It doesn't mean the sky is going to fall, but if we look back in early February this year, we can see right here, we can see when these February highs came in. Look down at the RSI here. We talked about it at the time. We said the 14-day, the signal went up over the 70 line, which means it's overbought. And then indeed, the Qs did soften here. They don't necessarily fall like a stone, but there is some profit taking that many times will come in as, again, we use that overbought word, at least in the short term. So if the QQQ does have to come back in here a little bit, we do have support down here at the 20-day moving average. There's price support and 20-day moving average at 323, 322. Then we go down to the 315. There's a pivot there and more consolidation, if I can draw a straight line, that would potentially act as support. We've got the 50-day moving average coming in at the same place. And then, of course, we can move down here to 310. So quite a bit of potential support here should the QQQ find it necessary to pull in a little bit. If you enter trades in the coming week, please consider using hard stops with your broker. Our last chart for today is a daily chart of the Healthcare Select Sector Spider Fund, the XLV. The XLV has 65 holdings in it. Top holdings include United Health, Johnson & Johnson, Lilly, and Merck. And is this a defensive play? Yes, it is, to answer your question. When I captured this chart today, the XLV, as you can see it right here, was trading at $131.81, just below its 20-day moving average, which is coming in at $132.65. So potentially a little resistance there, depending on what happens in the market. Now, the XLV, look left with me, please. The XLV in December of last year, it came up to a high here of 141, then dipped down in December, and most everything dipped in December, dipped down in December to 134, then rose a little bit, consolidated into the end of the year under the 20-day moving average, managed to get over the 50 but couldn't hang, and then rolled over and came all the way down to these March lows, and right about 124 or so. And it's so funny, every time I say March lows, I just go back like 20 years in my trading life and think of how many times I've said March lows, and believe me, it's been a bunch of times. At any rate, it rallied back up again, consolidated, moved back up again over the 20-day, the 50-day, and the 200-day. These are all inverted, but then rose up to a high of about 136 here, then rolled over again, because remember, this is a defensive play here. When you get into healthcare, a lot of times it's a defensive play. It rolled over again, came down to the 200-day, came back up to about 135, rolled over again. But now, at this moment, it came down to these lows here. Let's see, at $129.69 down here. then rallied up, and right now the XLV is sitting on the 200-day moving average and the 50-day moving average. Both of these moving averages are coming in at about the 131 zone. So it looks like the 50-day may want to do a golden cross and move back over the 200-day, which can be a bullish signal. Although, again, I don't trust much until I see what's going to happen with the debt ceiling debate. However, if you really want to get into the market next week, and we might or we might not, if the XLV can stay above the 50-day moving average, let's call it 131, that's coming in at 131, and the market behaves itself reasonably well, I may add a small position of the XLV to my trading portfolio, and I'm going to use a relatively tight stop down here at $129. Now, if and when the XLV rises up to this prior high, moves over 136 and stays over it for 3 days, or 3 closes, I will add to my position, and of course by then I will have a trailing stop. So you may want to keep an eye on the XLV in the coming week. Now, if you'd like to become a more successful trader, this is the perfect time to check out my online training programs. You can choose from 10 different programs like our popular flagship product. This is one of the best ones of all, 7 Steps to Successful Trading. Plus, if you'd like to learn how to swing trade, how to trend trade, how to bottom fish, that's right down here, how to read charts more efficiently, great for novices. We have 3 winning setups and many more. If you check out these trainings and find out how to elevate your trading skills and increase your gains more quickly and more easily. To see all of my online training courses, simply go to the link up here on the screen, or easier still, just check on the orange button below. So until next week, please be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.